for
Hey, James, welcome back. Great to see you.
Hi, likewise. Thank you for having me.
So we're in new territory, Bitcoin smashing through 11K. What do you think about network demand here?
Right, it's pretty exciting times. We saw really low volatility in the lead up to this breakout. I think we were down below sort of 25% annualized volatility, which for Bitcoin is super low. And during that time, we were seeing network demand steadily rising. So we had fees increasing, we had velocity increasing. We also saw spend increasing. And, you know, we had from ByteTree, 4 out of the 6 indicators we usually track were on. And we saw this break to the upside, and it's been extremely exciting to see that play out over the last few days.
And miner revenue is close to 10 million per day, is that right?
Right, it's looking super healthy. So, you know, I think I mentioned on the show a couple of weeks ago how important the miners are to the economy of the Bitcoin network. And so seeing their revenues increase is actually really bullish for the long-term health of this industry and specifically the Bitcoin network. They now make up to 12% of the total revenues. That's fees. So 12% of revenues come through fees. Which is, you know, one of the highest levels we've seen, and that uptrend is steadily increasing. As an aside, I mean, what's really exciting about that is that when people are able to pay more fees, it means that they are able to, you know, get value out of the chain. So it's not just about sending a $1 transaction anymore. It's about securing gold or securing other layer 2 networks like Liquid or settling Lightning Network payments. Lightning is actually also at an all-time high. So the total value of Bitcoin locked in the Lightning channel is at an all-time high. And that basically means that people are able to pay more fees on the Bitcoin network. So it's all very exciting right now.
So what else are you seeing about interesting indicators like network velocity at 600%?
Yeah, so network velocity is the speed that coins move around the Bitcoin economy. And the 600% level means that the active coins are moving 6 times per year. So the faster the coins are moving, the higher the demand and the more pressure it puts on price. And again, what we saw during this low price volatility period was that network velocity started to drop off. People weren't transacting as much. The network velocity then increased and subsequently price started to rise. So we're starting to now head back towards that critical 600% level. And you know, all the signs are good for Bitcoin right now.
And there's all these different narratives out there as to why. Some people say there's, you know, fear of missing out. Some people say it's because of all the activity on DeFi and non-fungible tokens. Some people say it's correlated to gold and looking at the deteriorating global macro environment. You know, you buying into these narratives?
Oh, for sure. I mean, there are so many different things driving Bitcoin's price. So you've got Grayscale on the one hand that's buying up pretty much all of the new coins that were mined in Q2 of this year for institutional demand that then leads to retail flows. Of course, the inflation hedge is real. So we've seen tech stocks dropping off last week after a magnificent bull run and a strong recovery off the back of the COVID sort of liquidity crunch in March. And Bitcoin's held its own, you know, against falling tech stocks. So, you know, for sure in the macro environment it's playing out. When you look on that buy side of institutional and retail, it's playing out. And then when you look at the actual use of the network, and as we showed, you know, on the first slide, network demand, it's increasing. So all of these different things are contributing to this upward momentum that we're seeing right now in Bitcoin.
Well, thank you, James, as always.
Okay, thanks, Nisa.